Folks, in this video, you're going to learn probably the weirdest approach that I've ever put on the show to trading a strategy. You're going to find out how the strategy works. You're going to learn the full-on details around it, the entries, the exits, the trade management, everything that goes with that, as well as how I managed to get it to a point where it could generate $479 a day if you're trading 5 days a week. Folks, there's an automated version of this fully available at the end of the show. So if you stick around, you're going to find out how you get access to that. Right, let's dive in and find out why I even ended up going down this route. All right, so this is Robb Reinhold in the interview that I did with him. And this was the part where it really intrigued me as to what he was doing. And I investigated further. So let's hear what he said.
If you don't do this part correctly, I don't care how well you know a chart. I don't care about your system. It doesn't matter at all. If you blow the exits, you cannot be profitable as a trader.
Okay, so there you go. If you blow the exits, you can't be profitable as a trader. So I investigated a bit further, found this video on his channel. So let's hear what he has to say about exits.
Our belief is the entry is a very small part of the trade. The most important part that gets almost ignored in most trading books is the position management. When do you sell? It's the hardest part of the business. We talked about all the rules we're going to use for entry. This video is about our exit.
Okay, so this video is about the exit. So what does he do? How does he do the exits? We're going to find out. And he's got this interesting bell curve that we can see here, which he talks about. And there's a way to sort of, I suppose, hack the bell curve to try and give yourself a better edge. So let's hear what he says.
You've frankly wasted a lot of time. Look, I've wasted a ton of time on the entries. You put very little focus on your trade management. Remember, all we need to do is chop those 3 terrible trades off. We can have a bunch of bad trades. We just can't have the terrible ones. And we got to keep the great ones. We got to milk those for as much as we possibly can. We got to let them go as far as they possibly will.
Okay, so how do we do this? How does he do it? I'm going to show you the exit rules that he actually put in place here on the video, and I replicated them 100%. I'm going to show you what I ended up doing with these and the random entry that I decided to pick, which took about 2 seconds to come up with. So we're going to dive in and have a look at these exit rules.
At some point, we will start to tighten this leash. So here's the next rule.
We missed the first bit there. So he said the initial trading stops at 2 ATR. So the average true range, just before we dive in and confuse everyone that doesn't know what an average true range is, what we're going to do is grab a candle here and show you what this ATR is. So let's pick this bull candle here. If we go all the way down here to this ATR indicator, which is based on the 14 period, which means 14 candles back. So if we take 14 candles back from here, we're going to get our calculation. So we're starting at this candle here. I think that's candle 14. We're looking at the high to the low of these candles. So if this is a candle here, you've got the high point at the top and you've got the low point at the bottom. So we're looking at literally the difference between these two. So that range of that candle there. And we're taking the average of all these candles to this one here to get this figure here, which is, and we hover over it to see 32.5 pips. So that means the average true range is 32.5 pips of this. So kind of, if you're looking to put, say we're going to go short on this candle here, right? We're going to say, well, let's go long. We'll go long on this candle here, 32.5 pips. So the chance of you getting stopped out with a 1 ATR is probably going to be kind of high, right? But a 2 ATR, 2 times that ATR, which is 64 pips, it becomes less, right? Because your candles need to get bigger and bigger than they currently are. So that's where the ATR becomes useful and very handy for exits, as well as putting your stop loss for protection as well. Okay, let's dive back in.
Once we have 2 ATR of profit, which is going to be break even. Remember, we've got a 2 ATR trailing stop. Once it goes 2 ATRs in our favor, the trade will be a break even. Once we get to break even, we're going to tighten that leash a little bit to 1.5 ATR. And then if it keeps going from there, once we get to 4 ATR profit, we're going to move to 1 ATR trailing stop.
Okay, so that's it. And I think he even says that.
And guess what? That's it.
Yeah, there you go. That's it. So that is it for the exit. I'm going to show you what I ended up creating and the entry rule I used, and then how it obviously made this $479 a day. Let's dive into that chart again.
Now, if you're loving the show and thinking, where can I go and trade? Why don't you check out my prop firm sponsor, Blue Guardian. Now, these guys have been around for ages. They've been sponsoring Trading Up for over a year. And some of the key features that make them so good is that they've got realistic profit targets for their challenge phases. It's only 8 or 4%. They also have a scaling plan up to $2 million, and they do profit splits of 85%, which is really high for this industry. They also have quick and reliable payouts and a robust reserve that make sure those payouts are as seamless and smooth as possible. Now, if you're looking to join, go and check them out. But first, grab my coupon code TradingNut, all one word. You're going to save yourself 25% off at checkout. There's a link in the description. Go and click that now. Right, let's get back on with the show.
Okay, so let's have a look at the entry rules. So what it is, pretty simple. So all I've taken is the close of the day. So this is a 5-minute chart. Let's just zoom in a bit. So we're taking the close of that day, the open of that day and the close of that day, which is up here. So the opening price, the closing price, if we zoom out again, we can see here that that was the opening price, that was the closing price. We're on a 5-minute chart. So every time, and I've limited it to buying only, and I'll tell you why in a second, every time we get a close above that line where the open's below it, we enter the trade long. Okay, now it didn't happen here or here because I'm starting at 2 o'clock in the morning versus at the first couple of hours. So we ignored the first couple of hours, hence these trades get ignored. Now we get another one here, it closes below, closes above, we get in for a long, and then do we get another one? Oh, we get another one that day. So this candle here, we open below, closed above, we take a buy. Now we get another one up here where this is crossing over the close of the day, I believe, or the open of the day. So cross above crossed above here. We entered that trade, stopped out. So that's the rule. So what do we do with that rule? Once we get in the trade, we trail the stop. Now, what I'll do is show you a little back test. We've taken a few of these trades already. We've got another trade here. This is the 4-hour chart on EJ. So we're selling there. We've got our stop loss there. So what we should see, so this stop loss is set to 2 ATR away from, and you can see the ATR indicated down here, away from the entry price. So all we're going to do is trail that when we get into profit. So we can see that stop loss move when we start to get into profit. Okay, so we're looking at a close in profit, not just it to go into profit. We're wanting it to close, and then we're going to move that stop loss to at whatever point. I think when it gets to 2 ATR in profit, then we move the ATR a bit closer. So it gets closer and closer to price. So we're going to keep going down. You can see it's moving even closer to price. So before it was up here, and it's gradually getting closer the further into profit we're going. So let's have a look at that. Okay, so we're now even closer. So it jumps up here once we close up here, and we're probably going to get stopped out soon. So that was the winning trade there. Now the losing trades, you can see here that this one here would have given us a trading stop that would have gone up and got us stopped out there. This one here would have saved us a bit. So that one there is probably a full loss, and that one there was a small winner. So you get small wins. You also get big wins. And if the thing just really flies, you're going to get a huge win. Okay, so that's the whole premise of the strategy. Now, we've got buys and sells happening there, but I ended up really sort of having a look at, first of all, the 10-minute and 5-minute charts. Now, there was nothing on the 5-minute. It was literally a curve that was, well, actually, it's not a good example there, but it was a curve that went straight down. Now, I ended up having a look at a 10-minute chart, and on gold, I tried everything, right? And this was what it pumped out. And this was with pretty much, the settings were refined because I really did struggle. So we're looking at just trading 1 hour of the day, and we had very specific, the ATR was 3 instead of 2, and we had this at 3.5. And, so we'd had to really tweak this thing a lot to make it work, but it did do all right. So 60% win rate. Profit factor wasn't great, but the drawdown was quite low. So we had a good looking curve here on the 10-minute with 308 trades. Forward testing it was break even. Kind of expect that because some of these times, it does go into a bit of a losing streak. Okay, so that was the 10-minute. Now, this is when I sort of thought, what about if we jump onto, for example, a 4-hour chart, something a bit higher. Now, this is a 4-hour test here. If we have a look here at this optimization table, so these are all the markets with 4-hour settings at default. And I was quite surprised to see that a lot of them, well, there was a good chunk that were actually making profit. And the ones that were doing really well were the JPY pairs. The top 4 pairs are JPY. Lowest drawdown at 13 to 20%. So kind of happy with that and thought, well, I can work with this. The profit factor wasn't great, but working with it a bit, we can try and improve that. Now, what I ended up doing, should I say, was I ended up testing all the different time frames. So we tested 3-hour, 2-hour, 1 hour, 6-hour. Most of them made, well, in fact, all of them made money, right? All of them made money. I think 2-hour kind of, for me, worked out to be the sweet spot because you get some of the 1 hours, you get all of the 4 hours, you get all of the 6 hours as well. So 2 hours was kind of the sweet spot. Now, with a 2-hour chart, we left the settings almost at default, but I did change the ATR period to 100. I tended to find that a bigger number worked better than the standard 14, albeit the 14 did work as well. So let's go through some of these results with these settings here. So let's have a look at, this was UJ to start off with, and this was probably the best one of the bunch. So 138,000 profit, so 138% return, 7% drawdown up here, 1.74 profit factor. So really good stats here. You can see here I turned off the short trades and it was 51% winners. So looking pretty good for UJ. The other tests, GJ was kind of not as good, but still upward sloping, half decent profit factor, lowest drawdown, and EJ was kind of the same, not as good as GJ or UJ. But with a little bit of analysis, looking at things in detail, what I discovered was that in December, everything kind of just fell apart. Even November wasn't great. So I decided to turn off December. And also the last few hours of the day weren't that great either, probably because it's trading into the close of the day. Now, with that in mind, I ended up getting a result which I chucked into Quant Analyzer here, this tool where you can load these reports in and see what happens if you combine them into a portfolio. Now, the first thing I wanted to test was whether or not we had correlation, an issue around correlation. Now, it wasn't the best correlation, but it wasn't the worst either. So not a major issue. So this is saying that if it's high, it's bright red, 0.7 to 1 is high, and this is clearly green, and 0.11, 0.27. This was done on an hourly basis. Now, on a daily basis, it looks a little bit worse, so we're going to show you that there. So it's 0.51, which is kind of halfway. So it's halfway correlated for I think it was EJ and GJ, right? Halfway correlated. So not the worst correlation in the world. It's not going to put me off. Okay, it's not going to put me off. The other thing I looked at was the Monte Carlo. This is where we just sort of see where could this go next, and you can see here it was upward sloping or break even for the next few months. So it was looking pretty good. And at this point, I think I'd taken out December and I'd taken out those hours as well. So let's have a look at what it ended up showing us in this full-on report. So here we go. So total profit, 343,000 with a profit factor of 1.69, which is nice and healthy, and 50% win rate. Okay, so we know we're not going to win like big every time. We know we're not going to lose big every time. So that's kind of where the whole premise around exits are more important than entries. And Robb's theory, in this case, played out. Okay, so what did we actually, how do we work out the whole 479 a day? So basically what I did was work out how many days we're dealing with here. It shows us down there, it's about 143 weeks. So 5 trading days a week. So to do the calculation, we had 143 weeks times 5. So 715 trading days. So we had 152 divided by 715 trading days equals $479 a day on average. So that's how we got that calculation.
Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. That's right, get either the Essential, Plus or Premium plans absolutely free, and all you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below.
Now folks, if you do want to take this fully automated trading strategy for a spin, then you can actually have a go at it on here. There's a free demo. It's called Screw the Entry Algo. That's what I've called it. Now you can buy the full version if you do want to get access to that as well. I'll put links to all this stuff under the video. Now, we did one similar to this just recently. It was called the AL Vacation Algo. Now, this was based on Alex Lera's vacation strategy that we found on the internet. Now, that's also available for free demo, and you can get the full version of that as well. Now, that's got some results that have come through. I'm actually posting daily updates on this in my Telegram, so I'll put a link to the Telegram below. So if you want to see updates to the Screw the Entry Algo, then jump into the Telegram and you're going to see daily updates on this now. So this one's been doing all right. So since we started testing it, the first week we had some little hiccups around getting the right environment to test it in. This was a mistake, this first trade. It should have actually been a full winner, so something more like this. And then we've had a couple of good winners, some partial winners, and I think a full winner here and a partial to finish off the first couple of weeks of trading. Now, if you're the kind of person that just wants to do it all yourself, have the freedom, then why don't you join my Robot Builders Club, where I actually teach you what I know around building trading algos. You're going to work out how to come up with a strategy and completely turn it into a fully automated trading algo. I'll put a link to that under the video as well. So plenty for you folks to sink your teeth into. If not, just play with the strategy yourself and have a go. All right, folks, thanks for watching, and we'll see you in the next episode.